This is Morning at NTV. Welcome back and many thanks for staying with us. Now, in line with the establishment of a single currency, the East African Monetary Union protocol was signed in November of 2013 by the East African Community member states with a 10-year roadmap for attaining a single currency by 2024. But with the timelines readjusted, it seemed appropriate to have country-specific macroeconomic reforms to have country reforms before moving to the regional framework in that regard. Now, this month, the East African Community with the International Monetary Fund rolled out homegrown guidelines for government, finance and public sector data statistics as the bloc sets the foundation for a monetary union. Now, for more on this, we are joined by Ramathan Ngobi. He is the economist and public policy analyst at Makerere University Business School. Many thanks for having made the time to speak to us.
Thank you.
First of all, tell us more about this single monetary union first before you go into anything else.
The single monetary union is the fourth major step or stage in our integration agenda. We have now reached the stage of a common market. Common market and the single market, they are really one and the same. We started as a free trade area, we moved to a customs union, now we've been at the common market. We want to move to this monetary union by 2024, and then we integrate politically as a political federation as the last stage.
And the last two, the free trade area, the customs union, were they achieved?
No. Unfortunately, we have been good at just doing partial kind of integration in terms of, because for us to have gone into a common market which requires free movement of goods and services and people, and we needed to first of all consolidate the customs union. The customs union required us to remove barriers to trade completely, both tariff and the non-tariff barriers, but also agree on a common external tariff which we charge those who are not within our integration. The goods which, for example, come from China or from South Africa or wherever, we are supposed to put a common tariff on them, all of us, the 5 countries. However, we have had issues amongst ourselves as East Africans that we haven't even tried removed the trade barriers. All right, in terms of tariff, we're okay, but we have started bringing in what we call non-tariff barriers. Things like recently you saw what happened with our milk in Kenya. Tanzania has completely refused to trade with us over the years. So if you look at the trading numbers, Tanzania has been performing quite poorly in all of the 5 countries. When you look at the aspects to do with the now introducing some standards and licenses and trying to look at where are these goods coming from, because sometimes countries have been claiming that some countries are getting goods from elsewhere when they already near final product stage, when they are not necessarily intermediate, and they declare them as intermediate. And it has been a very good excuse for countries to refuse goods from other countries, like even our sugar was, you remember, some time back, was not bought by Tanzania and other countries on that very claim that we import sugar and then re-export it, which is not true. So countries have not yet, East African countries, accepted this kind of free movement of goods. They are still practicing what we call mercantilism in economics, wanting to protect your domestic producers at the same time when you are promoting your own exports, forgetting that they also retaliate and do the same.
So if TZ is being hostile towards Uganda and Kenya doing the same in terms of trade, doesn't this put the whole integration process in disarray? Before we even talk about the single monetary union, doesn't that put the whole integration process in disarray?
And that's the point, because now you wonder what these countries are thinking, because even the 3, Uganda, Kenya, Rwanda, had at least agreed to move. They had created a coalition of the willing to move much faster in the integration process. You know, integration takes time. It's not an event, it's a process. You have to build the mutual respect. You build some kind of agenda which each of your populations in the different localities are going to really accept that we can forego some bit of sovereignty and get together. But now you see that Rwanda closed the border. Okay, we are trying our level best to get the border reopened, but those are not good signs of integrating partners. As I've told you already, the story of Kenya, you know, refusing our goods, and Kenya has been, you know, doing this for some time, especially when they discovered that our trade balance was changing in favor of Uganda, exporting more to Kenya. Compared to the past. You know, in the past we used to import a lot from Kenya and export very little. But over the years, with this integration, the trade has been smoothing, with Uganda's exports to the region improving tremendously. And I think the Kenyan citizens started putting a lot of pressure on their politicians to kind of pull back a bit and protect them. Like that issue of milk now, the farmers have been putting a lot of pressure on the Kenyan authorities to stop Ugandan milk from going there, because it's cheaper and perhaps also of better quality than what they are producing. And Kenyan milk is expensive because they incur extra costs. Our conditions here are more favorable for dairy farming than Kenya. They have to use a lot of water. They have to buy grass here. We do free, you know, ranching and so on. So all of those have been issues which we have been dealing with. And then Tanzania, for Tanzania, they haven't been trading with us. They are more leaning towards SADC, the other integration of the Southern Africa. And I don't know why, but they are feeling more comfortable there. Recently, when we had the Uganda-Tanzania Business Forum, we had this conversation in Dar es Salaam with the Tanzanians. Fortunately, I went there on the invitation of, actually I participated in the conference on the side of Tanzania. And you ask them, why do you feel uncomfortable to really trade with us as East Africa, and you prefer to trade with the Southern African countries which are very far? And they say, you know, it's a historic issue and a trust issue. So
they trust more the SADC, South African Development Community, than the East African community.
Yeah, the SADC tends to take a big lion's share of their trade kind of numbers than compared to East Africa.
So if the hostilities with the free trade area, the customs union which hasn't been harmonized, so doesn't that make the whole monetary currency, monetary union or single currency dream wishful thinking? Yeah,
it's quite, to me, it is still quite academic, but we need to pursue it. You can't say that now you are, you are stopping pursuing the integration, because that's the next step. We agreed in the protocol, we signed in 2013, that in these 10 years, we need to do 1, 2, 3 things to get in there. And much as there have been challenges on the other, stages, after all, we also moved from customs union before we had fully operationalized it, and we went into a common market.
So before we talk about the single currency, let's talk about the 10-year roadmap that was set by the member countries in November of 2013. How has it been, those 10 years? Do you think they've achieved positive results that can actually lead up to a single currency, or do you think there have been negative developments that will make this not a reality?
It has been a mixed bag. It's a mixed bag because some of the conversion criteria, countries have fulfilled them. And actually different countries fulfill different requirements. You know, the conversion criteria is just a set of requirements for you to be accepted to be a member of the common, I mean of the Monetary Union. One of the, for example, the requirements is to keep your inflation low. And in East Africa, they said it should be a single digit with an average of 5%. Now, most of the countries have been struggling on that, and they have actually achieved it. Like Uganda We have kept our inflation under check. Kenya, the same. They have had some issues, but they have managed to keep the inflation, and other countries. But now the key major requirements are mainly three. You must keep the fiscal deficit as a percentage of the GDP to under 3%. Now, no country in this region has a fiscal deficit of that magnitude. For Uganda, for example, it's 5%, and we are among the best performers in the region. Secondly, you need to ensure that tax revenue collection is 25% of GDP and above. Now, this is where we are doing so badly, Uganda. Other countries also are not there, but at least for them, they are near there. Kenya is around 18, Rwanda around 20, and Tanzania also is hovering around 16, 17. Uganda, we are still around 13%. We are moving towards 14, 15. Then the GDP rebase meant that GDP became a bit bigger all of a sudden. Jumping from $29 billion to $33 billion, and that affected our performance in as far as our tax to GDP ratio is concerned. And the last major requirement is the debt, public debt. You must keep it below 50%.
That is the most important issue. Now, please help us expound on that. Remember,
yeah.
Uganda's public debt is now standing at around 40.5. Rwanda around 50%. They've already hit the threshold. Tanzania, they're not doing so well. Kenya better.
Is already up, actually. Not 65%.
I'm telling you. So what are we dealing with, and what should be done to reduce this public debt? And will it affect actually the integration process?
Yeah, the public debt is a concern to so many people. Mainly because it has grown so fast in the last 10 years. For Uganda, we are still within
40.5.
Yes, we are not yet, above 50%, and we are among the few countries, us actually and Tanzania. We are the only two countries with that threshold, which is still in green. When you look at Rwanda is getting there, Kenya has already surpassed it, has to pull it back. But these economies are also heterogeneous. They are not similar. Kenya's debt looks bigger, but Kenya has more ability to pay the 65% of the GDP than Uganda's 40-something percent. Because Kenya, as a middle-income economy, and also with the more capacity to collect tax, finds it, their net, the debt to GDP ratio is quite lower than that of Uganda. So we don't need to be more obsessed with just the debt to GDP ratios. We need also to look at the capacity of the economy to pay, especially the servicing of the debt.
And now, how to help these countries service these debts?
Uganda's biggest challenge is there, because now our interest payment is 20% of the revenue we are collecting, and about 15–16% of the budget.
And according to the experts, they believe most of this public debt in the respective East African countries is not domestic. It's external debt. So how best can we grow our external reserves to beat this external debt? Because it's the main problem. And they believe if we were integrated as one union, we'll be able to grow our external reserves and beat off this debt in a day or two. But the problem is integration, which is slow. It's
a challenge of, again, the first criteria they gave them, the fiscal deficit. These countries must rebuild the fiscal space, the ability to go into the market, and you don't destabilize it. Very few countries have that ability in the region. And it's mainly because our debt also has been changing from the concession to non-concession debt. Concession debt used to be the debt from our traditional creditors, World Bank, IMF, African Development Bank, and others. They used to lend us at more quite comfortable conditions. And sometimes they could even forgive us some debt. We have been beneficiaries of that a number of times. But now most of our debt is private debt and also bilateral debt in the region. Uganda has avoided too much private debt, but it has gotten a lot of bilateral debt, especially from China. This is the worry that what if we fail to pay, we default on that debt? What would happen? Because unlike these multilateral arrangements where it can easily be negotiated to restructure debt or to find ways of getting some relief, bilateral debt doesn't behave that way. Similarly, Kenya got a lot of private debt, Eurobonds and so on, and these are quite dangerous. And our capacity as a region to rebuild the fiscal space is also limited because of the way we are behaving in terms of giving a lot of tax exemptions to multinationals, which are supposed to be paying debt, paying tax. And also,
in the end, they repatriate the money to their countries.
Oh, yeah. But we are saying we want to attract them to come and invest. But they haven't asked. They haven't asked for tax relief to invest. They're asking for other things. Papers have shown that. And then, two, we have also had the challenge of what we call debt rollover. When countries fail to pay debt, they are rolling it over to another year. So now our budgets are ballooned by these debt rollovers. Like in Uganda, when people hear that our budget is 42 trillion shillings, they think that is money available for spending. No, the discretionary budget is much lower. You find it around 30 trillion.
Okay, let's now focus on the monetary union, the single currency. The East African community did roll out a new set of guidelines for government finance and public sector data statistics as the bloc sets its foundation for a new monetary union. Now, should this have been the first step to harmonizing or fostering statistical harmony before rolling out the whole phase?
Oh, yeah. You know, in this region, we are doing things the other way around. First, things are not done fast. We move a step, then we realize that, oh, we should have done something before. Because now there are a number of challenges in the region, apart from what we have discussed. When you look at our capacity to collect and dispense disaggregated quality data, is a very, very big challenge. And there's no way you can go into getting a single currency. When, for example, people moving around money without any exchange risks. When you do not have enough information on how your, for example, base money is working, how your capacity to print money and not cause a ripple effect in the economy is concerned, and a number of other issues. Different individual countries have different capacities. For example, Uganda has built some capacity in her central bank, just like Kenya and Tanzania. But there are some countries which are struggling, of course, in the region. Look at, for example, South Sudan. It's already a member. How are we going to ensure that, because nobody knows the economy of South Sudan, its size, its disaggregated GDP, who's doing what, even the money, I'm sure the best money right now, if you ask anyone, what's the best money of South Sudan, even the South Sudanese don't know the amount of money circulating in the economy. So with that, it becomes so difficult for you to move into such a delicate stage of integration when you don't know what you are dealing with. We need to benchmark already established monetary unions, and in the world, the European Union is the fantastic example, and they have been very, very supporting East Africa at Arusha. They are the ones funding a lot of these kind of studies and so on. But do we really have the mantle to get to the step where, for example, European EU is? Because even themselves, they are about 25 members, but they're only 19.
It's a good thing you mentioned about the European Union. Bear in mind, it took them decades to achieve their monetary union. And how achievable, or let me say,
and they're still struggling.
Yes. How ambitious was this 10-year roadmap to attaining a single currency program? Bearing in mind that the EU, it took them decades.
No, decades. Yeah. It took half a century
to actually achieve a single monetary union. So how ambitious was our 10-year roadmap to achieving a single?
Overambitious. bordering recklessness to me.
So by 2024, you don't think we shall be able to achieve
I
this?
don't think so.
So
Because, one, you know, usually when I'm talking to my students at the business school who are doing MBA, I tell them that it seems Africans, we think differently from other people, especially when it comes to decision making. We don't want to inform our decisions with the, you know, empirical evidence on the pragmatism, the chance of success of those decisions that we make. About, not 15, about like 7 years ago, East Africans agreed that we shall not be able to achieve this integration, especially of the economic nature, if we don't integrate first politically. And they started the issue of expediting the political federation of East Africa. I remember we sat here in Kampala, we went to Nairobi, we went to Tanzania. I was in different rooms listening to these gentlemen and ladies. And they agreed that let us expedite this political process. But now look at what's happening in East Africa. To me, I'm not very satisfied with the way leaders are behaving lately in as far as this integration process is concerned. Actually, the private sector has moved much faster than the politicians and other leaders in integrating East Africa. If they could step back and really be more practical in the decisions that they take, especially by informing them with the facts from the ground. And to me, there is no better source of these facts than the private sector people. They should tell you how they are struggling right now to, you know, to trade together and move. The only thing we are doing in East Africa maybe quite well is movement, because we don't stop each other from moving, leave alone the issue of Rwanda, which is an outlier. Let us move, I think, systematically than wanting to be like EU overnight.
Speaking of moving systematically and reinventing the world, the West African side plans to introduce a new common currency called the EAC.
Yeah.
Why wouldn't we join hands with these people? Because it seems to be moving faster and they have better legal frameworks.
You know, the Francophone countries, they had one advantage, that they had already been assimilated by France and those other countries, Belgium and so on. And it became so easy for them to agree on certain things. They speak the same language, you know, French. They have almost similar cultures. The point here is heterogeneity in East Africa, and it becomes so difficult for us to agree on certain things. And I don't think us going to join West Africa is a viable step. I really think we're on the good track. Let us just be less ambitious. Let us try to be counting our steps quite well and ensure that we consolidate those steps that we take. And I think we shall get there in around 20 or 30 years. We can have a common, you know, currency in East Africa.
There's also talk of the Horn of Africa Alliance, aside from the East African community, and even the Intergovernmental Authority on Development has been talking about merging the East African community into the Horn of Africa Alliance to expedite the speedy process of integration. What do you make of that?
It's a good idea in as far as allowing us to move around is concerned. But beyond that, I don't think the economies will converge. To me, actually, integration or cooperation is good for people's well-being, because it would be fantastic for me to go up to Ethiopia or wherever without a passport when I'm using my national ID, or if I need a passport without getting a visa. It's a fantastic idea. The entire Africa, that's the dream. But this tendency of saying we are going to get these economies together, you know, let me tell you, monetary policies, fiscal policies, to cooperate them, to integrate them, takes certain particular preconditions, prerequisites, which many of these countries are not fulfilling. Because, as I've told you, everywhere is different. We are so heterogeneous. just here and here in Uganda alone, in Uganda, we are still struggling to integrate as Uganda. A process which started in 1962. We are still struggling. There are certain people who are feeling that those people in Kampala are better off than us, and they are stealing our resources and they are doing that. What about now when you go to Tanzanians or to Kenyans and you are not even, you can't communicate? Like in Uganda here, we have completely failed to learn Swahili, which is the language supposed to be used in East Africa. Not our fault. It's the fault of our history. Here, Swahili used to be associated with the, danger. And that's why, in Uganda, we know those words, which, exude danger. Things like la chini, toa viato, toa pesa. Those ones Ugandans know. Those which torture people. So we have failed to learn Swahili.
Yes. Aside from that, the EAC earlier grew $20 million from the World Bank, spread over 5 years to operationalize the EAC Statistics Development and Harmonization Regional Project. Do you think this new money and the support we are getting will help us speed up the process of integration and achieve a single monetary union by 2024?
It's a very good step, and as I've told you, data is everything. The challenge we have in this region is inability for us to collect data. We don't know each other. Even we don't know, for example, today how many people in Uganda. Everybody is giving you a different figure, and they are official people. A president will give you a figure.
You mean it could be more than 42 million?
Now you see you are giving me 42. But when I check the UBOS website, they are not telling me 42. They are telling me a different figure, the population secretariat. Then when you listen to the president, who will give you a different figure. In the evening, the speaker will give you. So we don't know who we are and what we are and what we have, because we don't have credible, disaggregated data.
So because of a lack of data to ascertain how many people we have in Uganda, Kenya, and Tanzania verifiably, would that mean that the $20 million we are receiving from the World Bank won't be helpful?
It's very helpful. It's a good beginning. It's a good beginning for us to, even that idea to think that now what is needed is to first get data.
And what will that money help facilitate?
It's going to facilitate, first of all, the establishment of that bureau they are talking about, to get this data. Two, to verify the available information and then add on what we have. In other words, they are trying to build an infrastructure to collect and process and then put available credible data for us to use. You can't plan without data. And integration is about proper planning. Because you are dealing with a bigger, complex kind of scenario where different people are bringing on the table different things, and you would want to know who are these people. Like I asked you, South Sudan economy, there is no statistics on it. So we would want to support them to re-establish. We know the challenges they have had with the war and so on. Even us who have not been to war for many years, we are still struggling with the data. Here, we can't plan for example, the subsistence farmers in Uganda, because we don't know who are they, where they are, which type of land they have, and so on. So all of that data is needed if you want to, have credible steps of integration.
So let's end the conversation with some of the challenges that might impede the realization of a single monetary union by 2024, in your opinion.
One, to me, is the macroeconomic instability. It's still a big challenge in the region. Because our economies are still very overly relying on gifts of nature, and this is a danger, especially in an area where we don't even have good mitigation against climate change and so on. Secondly, we have these issues now which emerging, the geopolitics in the region, this Rwanda and Uganda. Then you have Burundi issue, which hasn't been resolved. South Sudan, they are bringing good news. Today I was watching your TV, and they have re-established a new government. That's quite good. But still, there are a lot of unanswered questions about our geopolitics. Then you have to bring in the debt aspect. It's a very big challenge. These countries have borrowed a lot to build infrastructure, as if, you know, these economies are going to end tomorrow. You know, the speed at which we are borrowing is not very economically viable. We need to step back and look at, because now everybody has a very high appetite for debt. Everywhere you talk, you know, with government people, they say we should borrow, we should borrow. We need to build the capacity to mobilize revenue. The good thing, some countries which have been weak like ours in that area are coming up with the strategies on getting more tax revenue mobilized instead of relying on borrowing. And lastly, I think also the aspect of security hasn't gone away. It's a very big threat. Terrorism and the movement of small arms within the region. Plus also these vagaries we are seeing coming in. But of course I talked of climate change. When you see locusts, people can see just locusts as insects, but they are sending a very big signal on what can happen to these predominantly agrarian economies, because our economies have failed to, you know,
and
transform.
it also shows that we are not even united to combat the same.
Oh yeah, we waited until Kenya was battling them. Then when they crossed the border, that's when we now thought of going and battle
So those are some of the examples that we are not united.
Exactly.
Macroeconomics, geopolitics, debt security, climate change, and, and another one?
And the other one was the security aspect.
It's already here. Another one?
I think those are the key ones to me. These others can be easily dealt with, things to do with the domestic internal challenges of
in the respective countries.
In the respective countries. Those, the national governments can easily deal with them.
So what would be the way forward, just in case we operationalize the single currency by 2024? What would be the way forward?
We are not going to operationalize it just for
in case it happens.
For the sake.
And they hit their target by 2024.
It would be a big mistake to me, because it's going to cause a lot of distortions in these economies. First of all, our currencies at different levels. They haven't yet converged as the criteria required. So it might cause some challenge in terms of countries being unable to convert their currencies into the single currency without exchange risk. And remember, some of these currency reforms which we have had in the past had brought a lot of challenges in the macroeconomy. Here in Uganda, we had the currency reform in the 1980s, and it caused us some issues. So to me, I think we shouldn't do what Amin did, rushing everything, because Amin destroyed this East African integration by just going, you know, looking at inwards, and it's the same mistake which countries have started. We need to move and cooperate. The future is in cooperation, the future of humanity.
Ramadan Gaur, the economist and policy analyst at Makerere University Business School, many thanks for having made the time to speak to us.
Pleasure.
We ran out of time, but I wanted to engage you on the issue of external debt.
Oh yeah.
We can actually beat external debt very, very, very well if we actually unite as the East African countries in that region, beat the external
and
debt.
use our resources.
Because if you look at the domestic debt, it's really little.
Yeah.
Like in Uganda, 7%. When you go to Kenya, they only $3 billion. I'm telling you, if we unite and beat away the external debt,
but also I'll tell you how
the biggest
the
problem.
internal debt is more dangerous than even the external.
Next time.
Economics.
Thank you very much. Okay, you've been watching an interview based on the East African integration and the single monetary union. An agreement was signed on November 2013, expediting a 10-year roadmap until 2024 to actually actualize the operationalization of a single monetary union, a single currency. So we will wait by 2024 whether or not that shall be reality. My name is Romeo Busuku. Let's take a very short breather and I shall return with your birthday messages. Keep it here.
You're watching Morning at NTV.
We've come to the end of Morning at NTV. Unfortunately, we were not able to banter over some of those messages with regards to people who are celebrating their birthdays on this particular day. But get it from me and Nation Media Group, we actually wish everyone a beautiful and happy, joyous birthday this beautiful day. And we actually urge you to go out there and make it happen. It's your day. Go out and conquer. My name is Romeo Busiku. Let's do this again tomorrow, same time. Up next, BBC Money Daily. This is Morning at NTV.